Quantitative easing is a monetary policy whereby a central bank purchases at scale government bonds or other financial assets in order to inject money into the economy to expand economic activity.
So you might be wondering, what exactly is printing money? You'll get a pretty boring explanation on Wikipedia, where the end result is going to be you googling every fifth word. So in order to save you some precious time, I'll help explain exactly how printing money works to you as if you were a 5-year-old. So let's get started. Printing money, or rather quantitative easing, can be a pretty complex topic to discuss at times. So to help you explain it as clearly as possible, let's break down the topic into 3 simple steps. Starting with the first question, how exactly does a bank print money? Now, when I say central bank, I don't mean your normal banks like JP Morgan or Wells Fargo. I'm talking about banks like the US Federal Reserve or Australia's RBA. Think of a central bank like your country's bank. And this central bank's role is to loan money to commercial banks, like the ones that you or your parents or your co-workers regularly deposit money into. And then these commercial banks loan money to you for whatever reason that might be, maybe buying a new car or a house. Now it's important to note the difference between the two, because the central bank's main objective is the economic prosperity of its country, and a commercial bank's main objective is pretty much profit, for a lack of a better word. Okay, does that kind of make sense? Alright, let's move on. So, how exactly does a central bank print money? If you thought it was literally just printing money, that's not quite right. Central banks electronically create reserves in their own bank account, and then they use this money to buy assets, mostly government bonds, where bonds are essentially just loans. Now, by doing this transaction, you have essentially increased the supply of money in the economy. So, at this point, the central bank has injected a ton of money in the economy. But why would they give out so much money like this? It's essentially to lower interest rates. Let's just quickly define what interest rates are. Interest rates are essentially the cost of borrowing money, or in simpler terms, it's how much money costs. Let's check out this scenario. Both Teslas cost the same, 50,000 USD, but in 2021, the interest rates were 10% compared to 2020's 20%. So for someone trying to borrow $50,000 from the bank to buy a Tesla, not a good idea by the way, would you rather pay $10,000 a year or $5,000 a year in interest? Obviously $5,000, right? Because the cost of money is cheaper in 2021 compared to 2020. So fundamentally, you should think of interest rates as the same as cost of money. So why do interest rates decrease when there is more money? Let's use another scenario to explain this phenomenon. Oh, I can't believe I just lost to Ben yesterday. I'm gonna beat him as soon as I upgrade my deck. Dude, are we still gonna trade? Oh yeah, I was just thinking about how to pay back this money to my mom's since I stole it. Right. Dude, Charizard sucks now. Yeah, we need to sell this to some sucker. I'm down to sell mine for like $4. Did someone just say $4 for a Charizard? No way, I'll do $3.50. Sure. Haha, he's got the best deal ever. So let's analyze the situation. Try to think of the economy of Charizards exactly the same as interest rates. So, Alex wanted to buy a Charizard off Garrett after getting his ass handed to him in a game yesterday. He was down to pay $5 for the card, but he soon hears that someone else was also selling Charizard, so the supply of Charizard increases in the same way that the supply of money increases when the central bank purchases government bonds. So therefore, if the price of Charizard is going to go down because of an increase in Charizard supply, then the price of borrowing money, aka the interest rate, should also go down when there is an increase of money supply. And that is exactly why an increase in money supply decreases interest rates. Okay, so what if the interest rates lower? Well, the goal of lowering interest rates is to stimulate and boost the economy. So let's take a deeper dive and see exactly how this works. When a central bank's interest rates lower, commercial banks tend to also follow suit. And as the commercial banks lower their interest rates on their products, everyone, and I literally mean everyone and their mom, will start to feel a little bit more comfortable taking out loans for maybe a house, a car, or maybe a student loan. Because now money is cheaper than it was before. And soon, you'll see people all over the country do the exact same thing. When people are able to get loans more easily, they are able to spend more money. Essentially, lowering the cost of borrowing money increases the flow of money throughout the entire country. And an increased flow is what economists mean when the economy is stimulated. Not only that, when people are spending money on new cars, new houses, new services, the overall stock market tends to climb because each company in the stock market has increased profitability because more money is just being spent in the economy. As the stock market conditions improve, people will start to be more comfortable with risky investments. Before, when the interest rates were high, asset prices won't move much, so the majority of people's money will be in safer investments like cash and government bonds. Very little will be in medium and high risk investments like stocks and cryptocurrency. But in a low interest rate environment, money is cheaper, so people tend to seek a greater return and maybe become more confident in investing in higher risk assets. And so now we've explained the 3 basic steps and objectives of printing money and exactly how this works in detail. Bear in mind that this is quite an oversimplified explanation, and it doesn't go into depth about other macroeconomic factors like how bond yields are affected and how inflation works. But hopefully you guys will get the gist of the overall topic now. If you've stayed this far so far, thanks so much for watching. I'll be happy to upload topics in the future, so stay tuned. See ya!